Good morning, Profit First entrepreneurs and thought leaders. My name is Susanne Mariga, and I am the Chief Accountant and Chief Profit Advisor here at Mariga CPA. And today we are going to talk about the Economic Injury Disaster Loan Advance, or EIDL. There are two parts to the EIDL loan. The first part is a grant. And I know we talked about this originally, probably months ago when it first came out. The first part is a grant. And in this grant, what happens is when you apply for this EIDL loan, and you apply for the grant and the regular loan at the same time, that first part is really, hey, Sandra, welcome back. It's good to see you. That grant is actually forgivable, meaning that you don't have to pay it back. And the grant is for $1,000 per employee. And hey, Sandra, it's for $1,000 per employee, and you can get a maximum of $10,000. So up to 10 employees, you can receive this grant for. And they are determining the amount that you will receive based upon the number of employees that you had as of January 31st, 2020. So if you had employees as of January 31st, 2020, you are eligible to receive this grant. Now, the second part of the loan is actually not a grant. Okay, the second part is actually a loan, and it's a loan for up to $150,000, and this loan must actually be repaid. So you have to repay this loan if you are applying for this EIDL and you actually accept the loan portion. Now, you do not have to accept the loan portion. You can just accept the grant portion. There's nothing obliging you to actually accept the loan. But if you do accept the loan, this is the part that today I really want to talk about and what the strategy is for that. And this loan is the amount that has to be repaid. It's up to $150,000. And this is what we're going to talk about today. And specifically about this loan, the reason why I'm talking about the EIDL loan is for you guys that applied for the EIDL grant in March of this year, earlier this year, you're starting to begin to get these emails from the SBA, right? We've had several clients that applied for the grant are now starting to receive emails from the SBA, and the SBA is notifying them that they have been accepted for a loan, an SBA loan, and that they've been approved for an SBA loan. And I'm concerned about it because I know you guys are hardworking entrepreneurs. Some of the loans that I've been seeing are $150,000. And for a lot of us out there, that is the size of a mortgage payment. A mortgage payment. Imagine getting a business loan for a mortgage payment. These loans are $150,000 in some cases. And a lot of entrepreneurs are attracted to this EIDL loan because right now it's COVID-19 world, right? And they're worried, okay, I don't know what my cash flow is going to look like. I don't know if I'm going to have enough cash to cover my bills. And so a lot of these business owners, they're attracted to being able to stabilize their cash flow. They're worried about what it's going to look like 6 months from now in COVID-19. So if we get a second insurrection of this virus, and they're also attracted, and I'll be honest with you, like moths to a flame, about the low interest rate. The EIDL loan has a super low interest rate of 3.75%. They're also attracted because it's got a 12-month deferral plan, meaning that you don't have to pay on this loan for 12 months. And they're attracted to it because it's a 30-year repayment term, 30 years to repay it. And so they're thinking that, okay, this loan is smaller, I'm going to be able to adjust to it, that it's a good thing. But today I really want to talk about it because I want to make sure that you as an entrepreneur know what you're getting into. I am concerned by the level of commitment that you are taking as an entrepreneur to take on this loan. Now, in all fairness, before I really start diving in, I am just going to go ahead and show you how to apply for the grant portion and the loan. Just in all fairness, I'm going to go ahead and show you how to do that. So I'm going to do a screen share for you, and I'm going to walk you through how to do that. So to apply for this loan, you're going to go to sba.gov. And when you go to sba.gov, you're going to go where it says Coronavirus Small Business Guidance and Loan Resources, this big red button right here. You're going to click this button, Learn More. And once you click this button, Learn More, you're going to scroll down to where they talk about coronavirus funding options available. And once you get to that page, you scroll towards the bottom, it's going to be called EIDL Loan Advance. Now, again, remember there's two parts to this loan. There's a part that is a grant, meaning that it's forgivable for up to $1,000 per employee, up to $10,000. And then there's a part that's a loan. So you will click on this right here. It'll take you to the loan application. And literally, it's a very simple loan application process. I would say it probably takes you about 15 minutes to actually complete this. And, you know, for SBA loans that people have applied for it, typically it's a much more in-depth process. For example, you're going to have to provide financial statements, normally tax returns. Well, this is a very truncated process. It's very easy to apply for this loan. It takes about 15 minutes to apply for this. If it's taking you longer, there's probably something wrong. Very easy to get the grant. And also, again, even if you take the grant, you do not have to take the actual loan. So this is how you apply. Go to sba.gov and you can apply for that loan. So go to sba.gov. That's how you apply for that loan. Now, let's get back into our serious part of our conversation, right? You guys know that I am a uber spiritual person, right? So I cannot help myself. I'm going to share with you a scripture, okay? So the scripture is coming from the book of Proverbs, chapter 22, verse 7. And it says, the rich rule over the poor, and the borrower is a slave to the lender. So Proverbs 22:7, the rich rule over the poor, and the borrower is a slave to the lender. Yes, Bonnie, you hear me. Exactly. So much wisdom in the Bible, right? And debt is another form of slavery. Debt is another form of slavery. Now, you know, there's been a lot of talk lately with everything that's been going on in the news about slavery. And none of us want to be bound to slavery, right? None of us want to be bound to slavery. And debt is another form of slavery. The Bible tells that. When you sign a promissory note, when you accept the terms of a loan, you are bound to the requirements of another. In this case, that other person is now the government. You are bound to the terms that the U.S. government, that the SBA has set aside for you. And who wants to be indebted to the government any more than they already have to be indebted to the government, right? And so today I'm talking to you entrepreneurs that are out there, that you are building legacy, that you're not just looking at your business as a 1-year game plan or 5-year game plan. You are looking to build businesses that are going to last a legacy, that are going to be around for the long term. Hey, Christine, how are you? You're looking to build businesses that are going to be here a decade from now. They're going to be here 2 decades from now, that are going to be here, 30 years from now. And I'm talking to you guys here that are here playing your business to play the long term, to play the long game. And I'm talking to you today because the EIDL is a significant commitment. It is a significant commitment for a significant dollar amount, $150,000, right? For a significant period of time. A 30-year life sentence, right? A 30-year life sentence. You are promising that you are going to comply with these covenants for 30 years. And so before you take the EIDL loan, I want to make sure that you understand the commitment that you are signing for. I want to make sure that you understand the commitment that you're signing for. And let's think about some alternatives that you can do. First of all, with the EIDL loan, the proceeds are very restricted in terms of how you can use it. You can't just go out and buy whatever you want. There's very specific restrictions on the EIDL loan. The EIDL loan, first of all, can only be used for working capital. That is right. It can only be used for something called working capital. And specifically, not just working capital, but working capital that is needed because of economic injury that you have experienced as a result of the COVID-19 epidemic. So as a result of economic injury that you have experienced because of the COVID-19 epidemic. So meaning that you have experienced an economic downturn starting January 31st and continuing thereafter. That is how the EIDL is set up to be able to fund working capital. Now, working capital by definition, please, I got a lot of confusion from different people regarding working capital. Working capital by definition is the cash that your business needs, right? The cash that your business needs for its day-to-day operations, right? So it's not like making major investments or starting a new business or buying a building. It's specifically just to cover your day-to-day operations. And these day-to-day operations include things like your rent, your utilities, your payroll, your insurance, your inventory for the things that you're going to sell, things that are for your day-to-day operation. That is the reason why the EIDL loan was set up for you. And part of accepting this EIDL loan, when you sign that dotted line on DocuSign, that means that you are agreeing to adhere to certain mandated compliance requirements from the SBA. And I'm going to go through some of these requirements because I don't think that some people really understand what they are signing for when they sign up for this EIDL line. And one of the things that is required if you accept this loan is that you must obtain, right? You must obtain, and you must not just obtain, but you have to itemize every single receipt, every single contract that you obtain, that you use those loan proceeds for. You must obtain receipts You must itemize them, and you must keep copies of all the expenses that you use these loan proceeds for. And you have to not only obtain these, but you must keep these for 3 years after the final disbursement, okay? So there's an audit requirement. And these support, it can be your receipts that you're getting, the contracts that you're signing, your paid invoices, your canceled checks. You have to be able to prove how you spent that money. So if you're planning to spend that money in an unintended way, or you are a subject for audit, you must keep those receipts. Now, as a borrower, now are you just required to keep those receipts, right? You are required to submit copies of those receipts to the SBA if they request it. If they would request copies of those receipts, you're required to submit those receipts to the SBA, a very strict audit standard, right? Very strict audit standard. So not only do you got potentially have to put things to the IRS, but you also got to submit it to the SBA. The other thing about these funds is if you've got a PPP loan, right? If you got a PPP loan, Paycheck Protection Program loan, you cannot use those same monies from the EIDL to cover the same expenses that you were supposed to have covered in your PPP loan, right? There is no double dipping, no double dipping. So you must restrict those use, make sure you're not double dipping. The other thing is when you take this loan, this EIDL loan, you are also required to maintain current and proper accounting to meet SBA standards, right? So for you guys that are right now doing your own books and doing your own QuickBooks, and it might be right and it might not be right, this loan might not be for you because you are required to, again, adhere to a higher level. You're required to keep proper accounting for your financial statements. And not only this, but you have to maintain financial statements for the most recent 5 years for up to 3 years after your loan is paid in full. So you got to keep these financial statements for up to 3 years after your loan is paid in full. Yes, Sandra, you are feeling me. I love that gritting your teeth. You know exactly what I'm saying. You know exactly what I'm saying. So in addition, if you borrow from the SBA, you are now subject to more scrutiny. You're subject to inspection of your records. You're now subject to be an audit. Now, I know you guys, I'm not afraid of an IRS audit, but a lot of you guys are probably afraid of an IRS audit, right? The thought of an IRS coming knocking on your door probably makes you go, oh my gosh, I'm scared to death. Now, imagine also now being subject to another government authority, right? The SBA, right? The SBA can also call these records, right? And you are going to be responsible. If they call you for an audit, you're going to have to make available all of your copies, all of your records, all of your receipts, all of your appraisals too. If you buy equipment, your appraisals, you're going to need to provide that to the SBA. And in addition to providing that to the SBA, not only do you provide it to the SBA, but if you have to incur costs, if you have to incur additional costs, let's say you have to make copies of those receipts, if you have to hire an accountant to do your books, right, to have those records available, you are responsible for paying that, right? You are responsible for paying that. And not only that, not only are you required to keep financial statements, right, you're required to submit those financial statements annually to the SBA. You must submit your financial statements annually to the SBA 3 months following the end of your fiscal year. So when your taxes are due, you're going to be required to submit those financial statements to the SBA. Is this a loan that you really want to get into? Is this a loan that you want to do? Now, here's the kicker. Here's the kicker when you read the fine line. Not only are you required to submit those financial statements, right, to the SBA, but the SBA can say, you know what, these numbers don't look right to me. You're running at a loss, your income is too low. How are you supporting your family? I don't believe that this is real. The SBA can then ask you, hey, I don't believe your financial statements. I need to have them signed off and reviewed by an independent accountant. I'll be honest with you, there are different levels of accounting services. There's the basic compilation of just creating financial statements. There's the review, and then there's an audit. So a review is right between an audit and a compilation. And I'll tell you, our firm does those, but we don't charge less than $10,000 for those. Imagine having to pay an additional $10,000 a year to have reviewed financial statements for the next 30 years. Does the cost outweigh the benefit? Does the cost of compliance outweigh the benefit? Now, us accountants, I'm gonna be honest with you, we're like, cha-ching, cha-ching. We are happy about this. But for the average business owner, think about, is this something that I really, really want to do? Do you really want to do this? Do you want to commit yourself to this level of compliance? Do you really want to do this? Now, when accepting the EIDL loan, what you're saying when you sign your contract is that you are authorizing all the federal, all the state, all the municipal authorities that if the SBA asks for copies of your tax records, for your home records, for your valuations, make sure that your state matches your federal return. You have to provide that to the SBA. You have to provide that to the SBA. So again, you're open to another level of scrutiny. This is the kicker. I'm going to read straight from a copy of a contract that I saw. As a borrower, you agree that you will not, without prior consent of SBA, make any distribution of borrower's assets or give any preferential treatment, make any advance directly or indirectly by way of loan, gift, bonus, or otherwise to any owner or partner or any of its employees or any company directly or indirectly controlling or affiliated with or controlled by the borrower or any other company. And let me break this down in plain English terms for us. This means that you cannot liquidate, you cannot dispose of your assets in your company, and you cannot sell your company without the SBA approval. You cannot liquidate, you cannot dispose of your assets, and you cannot sell your business without the SBA approval. Going back to Proverbs 22:7, the rich will rule over the poor, and the borrower is a slave to the lender. Do you want to have to get SBA permission if you get the opportunity to sell your business? If you want to disperse some of your assets, do you really want to get the SBA's permission on that? And these are things that you have to consider when you're taking out and signing for that EIDL loan. Now, for my Profit First thought leaders and my entrepreneurs out there who are out there and you're here for the long game, you're here to grow that business into a legacy, to have it for 10 years, 20 years, 30 years, to even be able to pass this business on to your children. Is this a covenant that you want to make with the U.S. government? Is this a covenant that you want to make? Is this a burden that you want to carry for the next 30 years? Do you want the government to own and control your company? Do you want the government to have that level of control over you? These are the questions that you have to ask yourself before you take out the EIDL loan. Now, the Profit First stance on debt is we do everything in our power, everything possible to eradicate debt. And this includes not taking on additional debt. And when I think of entrepreneurs who are considering debt, I encourage them, especially to think about something called ROI, or return on investment. For example, when you're taking out that EIDL loan right now for working capital, what is the guarantee that by taking out this debt, by making this long-term commitment to this long-term payment arrangement, that you're really going to have an ROI, that you are really going to have a return on investment? What is the guarantee by taking out this EIDL loan that you are going to have a return on investment? And I will tell you this, if you as a business right now, due to COVID-19, and if you are experiencing that drop in revenue, if you are experiencing a drop in revenue, before you take out this loan, I would much rather see you adjust your operations. I would rather see you cut back your expenses, reduce your workforce. I would rather see you cut back and literally make your operations in line with what your real revenue is than take out debt just to keep your operations going. Because there's no benefit for you. There's no benefit for you taking out debt just to keep your operations going. Everyone else around you benefits, but you do not benefit, especially when there is no offsetting revenue to adjust for those costs. I would rather see you adjust your operations, cut back and scale, and make your business profitable in light of what you already have than just to keep on going. And I would rather see you personally, as entrepreneurs, consider changing your operations. I would rather see you cut back on those expenses, reduce that workforce. And not only will this allow you to operate at a profit, right? Because you can always cut back your expenses, right? But it's just going to allow you, because you don't have debt, to be able to set your company up for long-term healthier success, right? Because now you're not going to have this clutch on your cash flow for the next 30 years. And when you're taking out an EIDL loan and you're using it for working capital, right? Current business operations, or to continue operations when there's a decrease in revenue, there is no guarantee for you. There is no guarantee that you are ever going to generate a return on investment from this loan. There is no guarantee. And what that means, entrepreneur, what that means is you are gambling. You are gambling. And at worst, you are gambling with borrowed money. You are gambling with borrowed money. And once you're committed to debt, you're committed to the long-term repayment of that debt. And you're committed to that long-term drain on your cash resources that you are going to need to repay that debt over the next 30 years. And not only are you committed to a future reduction in cash flows permanently for the next 30 years, you're committed to meeting these onerous covenants and obligations that's required by the SBA that are listed in that promissory note that you're signing, right? Like the reviewed financial statements, having to pay for that, having to turn in your financial statements every year, having to give support. You are committing yourself to having to comply with that. And this includes taking on additional expenses to be able to produce those annual financial statements, especially if they're required to be reviewed by an independent accountant. And again, this is additional cost. And does this cost outweigh the benefit of having to get that loan? If you're going to be paying $10,000 a year for financial statements, does that really benefit you having that loan for 30 years for $150,000? And when I think of that loan size, and I think of that loan size being $150,000, I'll be honest with you, I can think of a whole lot of other better investments that you can make with your money that will almost guarantee you a return on investment. For example, if you're taking out a working capital loan, I would rather you not take out a working capital. I would rather see you take out a loan where you're actually investing in an income producing asset. Now, for a lot of you guys, $150,000 is the price of a home purchase, right? It's the price of a home purchase for a lot of you. And even if you don't choose to live in a home for $150,000, because some of y'all got really, really high taste, consider investing in rental property, right? And taking out a mortgage loan so that you can invest in rental property, because at least with rental property and by investing in real estate, you've got an asset-backed loan, right? You have an asset-backed loan with an underlying property value that supports that loan. Unless you live in California, you're right, because California's a little bit weird. If you live in most places in this country, real estate will maintain its value, right? In fact, it'll most likely go up in 30 years, right? Working capital loan, especially in a time where revenue is down, most likely will not produce that for you. And I'll tell you this, because as someone that owns rental property, and I do own rental property, I'll tell you this, it's a whole lot easier to generate income from rent income than it is to run a business, okay? It's a lot easier to generate rent income than to run actually a business. And this rental income will produce a monthly cash flow through means of rental income. So isn't that a much better investment for that $150,000 taking out a mortgage-backed loan? And by the way, real estate is expected to drop. Hey, Raymond, how are you? And much better than taking out a working capital loan. So definitely much smarter ways of using that money. Now, let's talk about the good part of the EIDL loan, right? Let's talk about the good parts of the EIDL loan. Now, if your EIDL loan, and in these cases, it is under $200,000, it does not require a personal guarantee. So it does not require that you give up your home if things go south for you. It does not require a personal guarantee. The default process associated with an EIDL loan is intense. Not only does defaulting on an SBA loan jeopardize your reputation, but it also impacts your ability to get another SBA loan in the future. And when you default on a SBA loan, there are serious and there are expensive costs associated with defaulting. For example, you have to now apply for an offer in compromise, right? So you're going to have to pay someone to help you file the offer in compromise. Definitely something you do not want to do if you're an entrepreneur and you are playing the long game, right? If you're an entrepreneur that's playing the long game, you don't want to mess with defaulting on an SBA loan. So for those of you who are considering taking out an EIDL loan, consider the long-term impact. Consider the long-term impact if you're considering taking out an EIDL loan. Consider what it is like taking out a 30-year mortgage payment with no guarantee of the outcome or the return on investment, okay? So if you're taking this out, what is your real guarantee for return on investment in this case? Then consider, will you be better off investing in alternative investments like the rental property? Better yet, consider adjusting your operations, right? So that you can guarantee yourself a return on investment. So if your revenue has gone down, adjust your expenses in the same proportion. That way you can still maintain profitability as the same percentage as prior. That would be a much, much better strategy. Thank you guys so much for your time today. It was really wonderful hanging out with you guys. At this time, I would love to open the platform for questions. So I'm going to go ahead and check out the chat and see the questions. Hey, Gary, welcome back. It's good to see you. I think I have one from Sandra, if they ask for it or even if they don't ask for it. And that's exactly what we're seeing. So if you applied for the EIDL grant, what's happening is they're automatically giving you approval for the loan. And the thing is, even though you take the grant, you do not have to sign the promissory note for the loan. And if you do not sign the note for the loan, they will not disperse that additional funding to you. So even though you may have already applied for the grant, no one is forcing you to take it. And even if you've already taken it because you just didn't know better, put it into a savings account and then just pay it back. You can actually pay it back immediately. So it's never too late to say no. Next week, Crystal will be back and she is going to be doing a Facebook Live on R&R. And I look forward to seeing you guys next time.